Are you thinking about moving to one of the wonderful cities in Ventura County? But the biggest question in your head right now is what's going through everybody else's of what about home insurance? Is there even going to be any home insurance? What is going on? We are lucky enough that Bart was able to interview Andres Winoku from Paladin Insurance. He is one of the people in the industry that is in the know. Before we dive into today's topic about home insurance, we did want to take a moment to acknowledge the devastation that has been happening in California with the recent fires. Our hearts go out to everyone who has been affected. One of the things we like to see ourselves as educators, we give you the information and then you take it and do with it what you will. Because remember, knowledge is power. We're going to take this moment to go over home insurance, and then Bart is actually going to be able to go out with Ventura County and visit a home site and show you how to get your house so that it is less at risk for fire danger. There are two words you need to know when shopping for home insurance: admitted and non-admitted. Admitted, basically layman's terms, not to get all in the depths of everything else, is covered by the state. They have to follow some of the state regulations and everything else. That means if they go bankrupt or something happens and they can't cover the insurance for their homeowners, then the state has said that they would cover up to a certain limitation. For them, with that kind of guarantee from the state is able to say, well, this is how much you're allowed to increase your premiums. Now, non-admitted, they don't have to go to the state and ask how much they're allowed to increase your premiums. And because of that, most people don't really go to non-admitted insurance companies unless they're high risk or unique situations, such as in a high fire danger area. One of our clients who is buying a new construction home has recently been calling around before the fires, finding out how much their townhome is going to cost to be insured. From an admitted company, Mercury, they were quoted around $1,000 per year. However, they've recently been quoted by a non-admitted company over $2,400 per year. As you can see, there is a big discrepancy about the premium you're going to be paying.
Is there a limit to how much carriers can raise someone's policy per year?
We've been seeing for the past couple of years, increases of 20, 30%. Up until this year, there wasn't really any regulation on that. I know right now, because of the state of emergency, they've put some hold on carriers dropping people. Once it's not a state of emergency, you can assume that once the renewals come around, there's going to be large
Right.
jumps.
Well, technically, Andres is right that there is no cap on how much your premium can increase. There are different rules set in place. For example, the admitted home insurance actually has to put in a proposal to the state asking for a certain amount of increase, and they have to really prove why it needs to happen if it's over 7%. For example, State Farm recently just sent us a letter and said our premium has gone up 20% because that's the highest that the state has allowed. Non-admitted for the high-risk homes, there is no restriction. It is a year by year. It's not as if you're being really renewed. It's just that you're almost reapplying each time. So they don't have to give you any warning that they are increasing it. While they're not allowed to increase it in the middle of the year, at the end of the year, then yes, they can increase it. That means it's really important for you as a consumer to be on top of it and give a call a couple of months before the end of your contract so you can find out how much it is going to increase, and you have time to actually call around and shop the market.
Is there anything homeowners can be doing to reduce their fire risk so that their carrier might give them a break on their policy?
Yes, there's definitely carriers that will do that. The biggest discounts you get, though, from what I see on the carrier side, are if you have a leak detection device, a fire suppression device, and then a centrally monitored fire and burglar alarm. Those are going to be the largest discounts towards your policy. The fire mitigation stuff is probably going to be a requirement more than a discount. It's just the way that insurance is going these days. Most of these admitted carriers, if they're going to offer you a quote, they're going to make sure that you have that fire line a certain distance from your house, and they're going to make sure that you have wind resistant shingles and stuff like that. It's going to be more of a requirement than a discount.
And the leak detection is big anyway, right? Because isn't water, maybe I'm wrong about this, but my understanding was that water is actually the number one cause of claims across the country. Is that right? Or...
Yeah, I mean, way bigger than it's just like an easier risk. It's something that like gets excluded from policies very often as well. You should make sure that it's not. Most places, they're able to see the claims that are on a certain place. So like, let's say if we're insuring like condos or apartments, stuff like that, usually, water's excluded, even though like, a burst pipe, that could be your biggest expense in a condo. You're not responsible for the outside, the actual building, but you are responsible for the inside wall to wall. So it's huge on condo insurance, HO6. A lot of it is excluded. It's not as bad with homeowners, but you want to make sure that's not excluded. Anytime stuff like this happens, you're going to notice that there's going to be inspections after all the fires. They're going to, see your roof at that point that hasn't been touched on for, 15, 20, 30 years.
Right.
They're probably going to raise some questions and, try to either, make you get that done. And then if you don't, they'll drop you, or, you get that done and they keep you and they raise you, 20, 30%.
Yeah.
It's been kind of the norm recently.
And so would you foresee inspections in general becoming more common even prior to someone actually having a claim?
Yeah, I mean, most of the companies, they're going to charge you for an inspection fee for the year. So at any point, they can come out and do an inspection. Sometimes it's a little bit less intrusive, and they just do a satellite scan. They check for like any dark spots on the roof, or they might come over with a drone or something. They might have you do a self-inspection. But yeah, it's going to be a lot more normal, especially getting into a new policy.
Okay.
Like, let's say you've been with farmers for 20 years. They all of a sudden want you to check out your roof and see if secured. If you don't do that, then they'll probably drop you, or they'll exclude the roof from your coverage.
Right.
And then if you're getting into a new carrier, that new carrier is definitely going to review the roof. There's always going to be an inspection where you're getting into a new carrier. The old carriers, they haven't done it in the past, but they're going to start doing inspections a lot more.
Yeah, with regards to fire prevention then as well, do you think that would become more common?
Yeah, I mean, there's certain requirements that you get into certain brush areas, the fire score gets a little bit higher. So you have to abide by certain rules. The brush has to be cleared, X amount from the house. There can't be any limbs or any foliage or plant life, like a certain distance from the home. All of those are going to be taken into an account from carriers that haven't assessed the property in a while. I do have other options if like you're finding, your clients or people have been with the one carrier for a while and their home is a certain way and they want to keep it a certain way. There's other carriers that, will take that kind of risk and they'll be surcharged for it. But yeah, most of these carriers are going to be pay a lot more attention to that. It's really the distance between the hydrant and then the closest fire department, which will determine the your risk factor. Besides the hillsides, brush and stuff.
Right.
Those are really big factors for insurance companies.
Is there one set of maps that insurance companies are using, or do they all have different maps and ways of going about writing their policies?
Yeah, it's really tough because they all do have different ways to calculate the fire score. A lot of them were based off of historical maps at one point. Now they're looking at the risk factor between the more recent years instead of historical maps. Right now we're seeing a lot more admitted carriers that have left the state. They're coming back in, and then their price is kind of adjusting to what new normal is.
Do you see a substantial reduction in cost for policies then as you move closer to the coast, essentially, like Oxnard, Port Hueneme, and parts of Ventura?
Yeah, some communities are going to be a lot more heavy hit than others. I can't really equate it to moving closer to the coast or farther from the coast, because if we take the Palisades thing, for example, that one was right up on the coast, and
that's true.
It's extremely hard to write there.
Yeah.
And then some carriers, they have a problem with writing next to the coast because of flood, hurricane. So it's like a give and take. The farther you get away from the coast, it's more dry and there's more brush concerns and stuff. And the closer you get from coast, there's more concern about ocean stuff going and happening. Camarillo versus Oxnard. Oxnard is going to be much easier to write than Camarillo. if we're talking about like, LA versus Santa Monica right now, LA is going to be a lot easier to write than Santa Monica. Palisades area is going to be very.
Okay. And will all of those claims in those areas, I suppose, will still affect policies here, right? The prices are going to go up here just because they have to pay for those claims somehow. Is that how it works, basically?
Yeah, you're going to notice, I mean, they're going to have to adjust pricing again. Last time, if we're talking about like price per square foot for
Yeah.
rebuilding on a house,
Yeah.
like a couple of years ago, it was, I mean, yeah, a couple of years ago, it was 150.
Okay.
And then, about 4 years ago, it kind of brought up to about 350, and it's been 350 for about, 3 or 4 years now.
Okay.
But like after the disaster happened, the cost to rebuild was, upwards of 500,000 or 500 per square foot.
Right.
The insurance companies have to take that into an account, once there is a big disaster and the price per square foot is $500 to replace your home. They have 1,000 homes to rebuild. It's definitely, they need to offset the cost somewhere. Not only are they going to be dispersing the cost into like other homeowners, and their prices and stuff, they're going to be adjusting their price, with their whole board, like making their price higher on general liability, other lines of insurance. They'll all start to go up.
Okay. So when someone's getting a policy then, and they're thinking down the road, what if there is a fire and some of my house is damaged, or there's a rebuild to a house, what would you recommend to them so that they have the coverage, that there's enough there?
I would recommend that they have extended replacement costs on top of whatever they feel like their house is going to be to replace. There's an extra additional coverage called extended replacement costs, which will extend the amount of money they give them, additional 120%, 150% to meet, the difference in price, between a state of emergency and a non-emergency situation. So you will have more money if you need it to rebuild your home. So that's a very important coverage. I mean, there's a lot of really good coverages. Besides that, like, there's all these fires going on, and fire protection is like a huge thing on people's minds, but all those houses are on like a big hillside, and then the rains are going to come, and there's going to be a lot of like mudslides and landslides happening now. That's not going to be covered on your normal homeowners policy. You would need a flood policy to cover you for any mudslide. You would need an earthquake policy to cover you for any earth movement stuff. So if there was an earthquake that happened and there was a flood that happened at the same time, it would be very hard for them to determine whether or not it was the earthquake's fault or the flood's fault. So you want to be super comprehensively covered and get all three policies. That's kind of the big thing. You don't want to leave any room for the carriers to blame somebody else. You want to make sure that everything's covered.
The only thing worse than not having insurance is not having enough insurance. If you are underinsured, or you don't have the amount of your deductible set aside, you're going to be in a whole lot of pain when it's time, if something devastating happens to your home. I'm going to recommend is that you walk around with a videotape, and you videotape or you take pictures of everything in your house, and try to do that yearly or whenever you buy something expensive, and put it on the cloud. Find somewhere safe to have all of that information. That way, if God forbid something happens, you have it available for your insurance company.
That'd be then having some compensation if you're needing to rent a home then for quite a while your first home's being repaired.
Yeah, your loss of use or loss of income if you're, it's a rental dwelling. And yeah, it's very important. And you don't have to use it to live somewhere else. I mean, it's just money for you to use while you're living somewhere else. So you don't have to spend it on like a hotel. Like, you can live with a family member or a friend and then use that money to pay for food and gas and just your life. But that is a very important coverage that anybody should have if they're in a risky place.
What are the questions that people should be asking their insurance broker?
Something that probably should be said is you are with a preferred carrier, and a preferred carrier meaning like the big names in insurance, the California admitted ones like State Farm, Farmers, all those guys that you think of when you think of insurance. If they are increasing your price by 15, 20, 30%, I would probably think about keeping it, because you're not going to be able to get back into those markets once you either get dropped or once you leave. So if they are giving you an option to stay with those markets and they're asking you to, take a look at your, your landscaping or something like that, I would probably entertain that, because it's definitely going to be very hard to get back into those admitted markets once you're out of them. But for anybody that is out of those admitted markets, I have, 10, 20, 30 other carriers that'll be able to write it and offer you insurance on it. It's just a different caliber of insurance. It's not, California admitted stuff. Even though it's very hard to get into those markets, there's just not a lot of people writing it. Very few communities able to get into it. So anybody else that falls into that category where they're having trouble finding insurance, they need to speak to a broker.
We hope this has answered some of your questions, and we know you're going to have a lot more. So feel free to give us a call, or Andres a call, or your insurance provider a call to ask any more questions you may have. One of the services we like to provide our clients is, well, we're going to be going there while you're looking at the whole house, and if you're in love with it, we're going to be asking about where the lot lines are so that you know what property you're going to be having to take care of. And if there's going to be trees you're going to have to be taking care of, or brush, keeping it all down for the safety. What kind of roof, what kind of siding, about the eaves. It's our job to make sure that you're safe and you're taken care of. So if you want real estate agents who really care about you and help you throughout this whole process, feel free to shoot us over a text, send us over an email, give us a call. We'd love to hear from you.